Hey everybody, DayTrader Rockstar here, and today's video is a video announcing a couple things, but showing something great. Today we're going to go over the flag technique that we trade. We trade a flag technique that's based off our stochastic oscillators, our bands, the high probability setups. So this is a release of a new bot that I just put out. It's the Extreme Flag bot. It's an update from the 2020 Bull Flag and the 2020 Bear Flag. But there's a lot of cool stuff in this. Super excited to launch it and get it out to everyone. So I'm going to talk about that. But I'm also going to give a good background on how we trade flags. This is the most incredible lesson plan you're going to get right now. Now, I broadcast each day. I'm just going to throw this out fast. This is mostly going out to our members. So members, please bear with me. I'm DayTrader Rockstar. I trade live every day at DayTradingRadio. We get on the air probably around 8:30, 9 o'clock. We trade all day, every day. I've been doing this since 2007, every day. We have a great community of traders. Every morning we meet. We have trading rooms, option traders, futures traders, stock traders, a wonderful community. And I teach our methodology. And there's a few things that I teach. I teach great setups in the market, great setups using stochastics. And stochastics, again, I'm not going to use this video for everything, but what you can do here is when you go to DayTradingRadio.com, you can just scan on that. It's going to give you a username, password. You can sign in. You get 14 days free, no credit card or anything, to come in and check out everything, all right, and trade with us. And you'll see exactly what I'm talking about. So with that said, back to the members. I'm very excited to launch this spot. You're going to love it. It's based on, it's our flag technique. Now, when I trade, we look for certain setups. I call them high probability setups. And, again, I could go for hours talking about stochastics and how we use them. But, as a general understanding, we're going to be looking for a certain pattern in the market. And we're going to use stochastics to measure out that pattern. Imagine, I want to show you the kind of chart we're looking at. Let's take a look at this chart. Imagine, being in the markets for decades, or, I don't even know how long, and watching the same thing every day, and then developing something that, because you start to see rhythms and things in the market that seem to play out over and over again, but there's something there that you just can't put your finger on, and you're always searching for it. You're always searching for that holy grail in the market, that perfect thing, but you're never going to find that perfect thing. The market's always evolving, always changing, and what works one year might not work the next year. What the stats that people put out doesn't mean anything going forward, and we don't know what kind of news is coming out tomorrow, more or less than 6 months from now. So, in truth, the market's like a casino. If you're in it, something goes wrong, you could pay for it. If you're an investor and you want to hold through that stuff, that's great too. What we do is we trade for, I call it trading for income. Daily setups where we're going to try to make money each day, take that money off, wait for the next setup, take the trade, take the money off. So mechanical that, and this is what you're going to have to learn. You're going to have to learn, you have to become mechanical. You're going to have to become not emotional. You're going to have to become like a robot, like a machine. No emotion, fear, greed, that stuff is going to wreck you in the markets. It really is. And over trading and being there. And these are the hardest things to get by. So I developed a methodology that works so well that, and people know how well it works. Everyone knows, and they come to the site and stuff, and they find out that, John, I just can't do it. Well, how many trades you take today? So 35. It says 35 trades. And I'll go over and I'll say there was only 6 qualified setups. What were you trying to do? And it comes down to that for everyone, myself too. You can't win it if you're not in it. And if you're in the casino walking around with money in your pocket, all you have to do is put it down and push a button. You have a chance to win. So it's that mentality you have to get through also. It's very hard, very hard. And I don't, as much as I do coaching and stuff, and I work on the psychology of it, that all comes down to psychology, because I want to show you what works in the market. I've been in this market 25, 27 years. I know what works. I have the patience now to wait for it, because, after a while you can only get, you start to lose as many fingers as you can, and then don't put your hand out there anymore. things work in the market, but the patience that are required to wait for those things to happen in your favor is the hardest thing for a trader kind of to master. My job is to bring these setups to you. I think I have some really cool features on the show that we get alerts out to this, and this type of setup right here that I want to show you, the bot. This bot is incredible. So let's talk about the flag right now. I talked enough about the psychology of the trade. The flag setup. The flag setup is it's what we call a continuation pattern. So it's going to be kind of a video about flags also. And when you think of a flag, everyone thinks of the Old Glory with the flagpole and it just kind of draped over and stuff. And that's basically what it has. The important part, it does have to have a flagpole. The flagpole is very important. That represents an aggressive move in the market. A big move. And I always say, and when you're trading, and if you're trading with my methodology, you want to watch this move off the 20-period moving average. Now, the 20, we're trading the one, for argument's sake, and this works on a lot of time frames, and it works on everything, because it's math and it's science, and it's the underlying formula that stochastics are applying and reading are telling us certain things that are going on underneath the hood that we can't really see until we actually start to see it. And then you confirm it with the stochastics, and then you know that you're on the right track, and you take that trade, and 9 times out of 10 you're going to be making money. But wait until that. And now my job is to get those setups out to you. So we've been trading flags for a long time. We've been trading divergences for a long time. Those are the 2 top tier trades here. Divergence are easy enough. The lower trend line quad rotation, something I invented here. The concept of having multiple time frames lining up is not new to the markets. That's just confluence and stuff. But to take this combination of stochastics that I've put together and get them to sync up and give us such a big return, and then be able to add that one indicator to other things, just makes this thing almost unstoppable. The only thing that's going to stop us is the trader himself, So flags, basically, we call these flags, we call continuation patterns. That means if the market is trending up, a flag is typically a pullback from the direction it was going, and then a follow-through. So a bull flag would be a move up, a pullback, and a follow-through. Bullish wedge flag, anything like this is a flag. I wouldn't put too much into the wedge flag versus the bull flag, because this wedge flag is a bull flag. It just hasn't hit the bottom part of it. And sometimes you'll see the divergence right here on the wedge flag that gives you the clue. So you're using you're using a divergence in a flag. That is the combination that I love. I love that combination. It always works. Always. That's kind of the holy grail right there. Bullish pennant and stuff like that. But all basically have the same thing. The important thing is the flagpole, which is an aggressive move off the 20-period moving average, and then the pullback to the 20. Now, I say the 20 on this, and this is why I'm using the 20. Bearish flag is just the opposite. But right now, we'll kind of focus on the flagpole. Now, I don't have a moving average under here, but I'll show you on my charts. Just picture a moving average underneath here, or a trend line even, going under, all right? Nice little flag there. So let's go over to the markets here and say, we see 4 stochastic bands here. We have 1, 2, 3, 4. All right. Each one represents, I'll tell you, the top one is the 9-3. Then we have the 14-3. We have the 44 and the 60-10. Now, this is the NinjaTrader chart. Remember right before I showed you, you could get that trial membership? If you go to DayTradingRadio, right, you go to membership, you get the trial, you sign in. It's very easy. You're going to open up to your dashboard. This is all your trading features you're going to get right here. This is my screen and stuff. This is the trades we take, get sent out. We have news feeds. We have squawks. We have alerts, playbooks. But I want you to go up here to the live chat rooms over here. There's a lot going on. The Rockbot channel, the Tradeometer, School of Stock, which are courses, is everything. But up here in these links is really important. So when you do sign up and you want to get this template's here for you for free. Just go to Playbook. Playbook will go right in, and you'll see here chart templates for NT, MedVed, TradingView, TC2000, etc. Also, I'd really want you to watch this George Lane webinar from 1988. He's the father of stochastics. I think that's a good beginning point for someone who's not introduced or not familiar with stochastics. Even if you are, and just see a historical video like this, it's really cool. And there's so much more. There's hundreds of links here, hundreds of forums that you could go in. And it has my playbook. A lot of this stuff is my playbook. So there's 3 or 4 pages here, and these are individual videos that will help you identify each of the setups you might hear me talk about during the day. All right, so there's just a tremendous amount of information on here. Trading playbook number 1, the 1, 2, 3 pattern. That's our basic pattern identification. You have to learn the 1, 2, 3 pattern. Very simple, stuff like that. So I just want to go back. If you do want this template with the 4 stochastic for NinjaTrader or anything else, that's where you get it. All right, next up, 4 stochastics, 9-3, 14-4, 14-3, 44, and 60-10. Fast history. Was working on this to time up multiple time frames, but keeping it on one time frame, the 1 minute time frame. But I also wanted to see what the 5 minute was. Now I could overlay the 5 minute, but I ended up doing this way because at the time when I put this together about 15 years ago, I didn't have the technology I had now to kind of, so I did a lot of this stuff just by trial and error until I tightened it up. So this, and the different moving averages that are applied to the things. So everything tightens up. So this is what we call our quad. These are our quad stochastics. And from the quad stochastics, we measure out how the market's moving. Now you consider, when we talk about the quad, this is your default stochastic. Your 9-3 and your 14-3 are pretty much defaulted to all charts. That's something that you get all the time. When you open up your stochastics, lots of times they already have a 9-3 or a 14-3 setting already marked. That's fine. So I keep those too. That's the original George Lane stochastic oscillator. Then I was working on the 5 minute, and I was doing the calculations for the 5 minute, and how many candles I would have to do, and then applying a moving average that would kind of represent if I had the 5. And this kind of sometimes a little hard to, vision if it's the first time you're hearing this, but I apologize. I'm probably not the best in the way I explain it, but the 60-10. Whatever that is like having the 5 minute chart and having the 9-3 stochastics on the 5 minute, which is a very powerful overbought and oversold. So you always want to have that 60 on your side. So when the 60 gets oversold, we know that the 5 minutes oversold, and we also know the 1 minute's oversold. And that's when you have the bigger moves, when they all line up like this. That's when you change. That's when we go to work, is when they all line up. And when they all line up and they give us the divergence, that's even bigger. So these are the areas we make money. And if you make money consistently on that, and you do that, what happens to you mentally is you realize, hey, I'm onto something here. The only thing that's holding me back is my lack of effort, my lack of whatever, laziness, I'll do it tomorrow. But if something was showing up and you said, all I have to trade is divergence, John, I said, well, you trade divergence, most likely you're going to get a nice move. So wouldn't you want that divergence handed to you? So that's my job, is to hand those. But now I don't want to miss them either. So I've developed a set of bots to identify our high probability setups. So long story short, it's kind of a long story to kind of get us to a point where we are now. That's a nice divergence, by the way, for the divergence traders who trade with us. That's textbook, We have this nice channel. We have a low. We have a lower low. We have a higher low. There's nothing here on the quad, but you always take every divergence. If this was down a little bit further under the 20, it would be a quad divergence and still would be kick-ass. And it is either way. I mean, look, this is, it's just so good. All right, so we're concentrating on flags, and our flag criteria is, now remember what I said about the lower stochastic band here. I kind of went off the track. This 60-10 represents the 5 minute time frame. The 5 minute time frame, all right? This 9-3, I say, represents the 1 minute time frame. So think of it this way. Think of it as this stochastic is the bigger channel. So you might see that there might be a big channel here. just like that. It just happens to, things seem to line up and stuff, and there's a much bigger channel with the low starting here and the high going all the way up here. Now, if we notice where that low started, it started with the 5-minute or the 60-10 down here oversold. And it went all the way up and it continued to move up. But the next time it came back down, we're oversold again. So we consider this like the 5-minute chart. So if the 5-minute is set up and starting to move higher, you have a good trending market. Now, when the 5-minute embeds itself, and this is called embedded, for more than 5 periods, and the 9-3 comes back down. These are what we call the patterns within patterns. You typically have the larger channel, which is defined by the 60 period, and then you have these smaller channels, even down to a point like this, And I could probably move this. Trend line down a little. I'm not even sure. Like, we could probably tighten things up like that, or whatever. I'm not worried about it too much. What I'm worried about is the 9-3 compared to the 60-10, all right, and where that price is compared to the 20 and 50 period moving average. If the 9-3, if this is moving up, that's very bullish. If it's pinned up here, it's very bullish. In either case, and this is what the bot's going to do, is going to identify when the 9-3 comes down quickly and the stochastics are pinned up here. Not that hard to program. I think everyone could probably get a hold of program that themselves. It's not that hard. Now, there's other things I want, because we're experts at this type of setup, this playbook trade, the 2020 bull flag and the 2020 bear flag. So I would say we're really good at trading these, because we watch them every day and we know the tendencies of them and how, if they get weak, and know certain things about them. The first thing is that 60-10. That's the number one thing. If that's above 84, and our old flag, let me see if I don't want to get too overexcited here, because I'm pretty excited about this new script. Let me make sure everything's still recording properly. This is like the 5th time I'm trying to record, and I've always had something go wrong. So let's go. I want to you already have these scripts. Now, if you remember here, and you have your script membership, which is there, you get all these scripts. You get the bull flag, you got the bear flag, but I want to put this is the one that you have right now. All right, and it all has the criteria. I want to talk about it for a second. This take profit. All right, so this is again the Rockbot bull flag. I think I have another. Well, no, this is the updated lots. So this is how many contracts you're going to be taking. So whatever you want to put in there. Take profits, lots. So here's your first take profits ticks. So this is your target area. So whatever you want that, and again, this is not the way I recommend trading with bots like this. I recommend let the bot get you in it, and you manage to trade based on your knowledge and my knowledge of how the trends are going to develop, and if you should let stop, where to put your trading stops and stuff. Because the automated system is due to be stopped out because of just the market algorithms and knowing where things are, and almost the psychology of the trade. It knows, it's whatever is going on. There is things out there that know when you go in a trailing stop, it comes just enough down to get you and stuff. So understanding the stochastics, and I programmed a lot of this into this new version, so it is kind of more of a little intuitive. Anyway, this is the original one. Now remember, behind the scenes, under the hood, it has that it has our criteria being met. I also had a couple other things that I want to. There's a couple slope indicators in there that I want to keep in there that kind of try to keep you from getting run over on a flag or something like that. But I'm just going to run this right now. So this is take profits. So I just put down 4 ticks. Now, these all come defaulted at these levels. I would adjust these. I mean, you could even say that you could put down 8, 10, 12, 14. And then your stop loss automatically goes in when the trade goes in. Trades in, a stop loss goes under 6. I would recommend putting a 12 there, which is 3 points. That's way too tight. 6 is in this. This flag is from the formula which had a default. It was from back in the day when the market wasn't giving us big moves. So You would tighten that up. If the market wasn't giving you a lot, you would have to tighten up your parameters to capture what the market's giving you. All right, it's very important to understand how that this is not the golden rule. You have to read the markets too. You have to. This is a tool that's going to help you. It's not going to be 100% because you don't know what you're trading in the market. You don't know the directional trade. If you just throw a buy signal in and the market's trading down, you have a better chance of getting run over. You have a harder time to time the bounce if the market's trending very strong to the downside, especially if you're trying to catch flags. You won't even get flags really on the downside things. You don't have to worry too much about that, but like divergences and stuff. Anyway, I put the stop loss at 12. Give it a little bit more room. Trailing stop. Now, whatever you have your take profit ticks, whatever number there is a 4. That's 4 ticks, 1 point. You could set that up here and start it at the same point. So if it goes up 4 ticks, the trailing stop starts at 4 ticks and it places its stop 4 ticks under the price, which would be at break even. So I call whenever all 3 of these, the 4, 4, and 4, each one of those are even, that's called a break even stop loss. Basically it goes up to the first profit, then moves the stop up to break even, and then the rest, whatever you have left on that didn't get sold on that target, if you had 4 contracts and it says take profit lot and you take 2, or actually no, you had 3 contracts and it says take 2 off, that means you had 1 left, which is being controlled by your trailing stop. And if that continues to move higher, explodes, that's fine. You still have a contract on. And that's it, and that was our first version on this. Ooh. All right, so I just ran this. Now this is the 2020 bull flag. You have this one. Happened. There was actually a bull flag here, and it took it up to here. Then the trailing stop came in. Now there was a flag here, but probably because it just got out of. It needs, after the trade is done, it require a certain amount of candles to activate another trade. So that's why I didn't grab that one right after. And so this is on the 1 minute time frame, and I built this to do the trade on the 1 minute time frame. But if you'll see if you put this on the 3 minute or the 5 minute, it works just as good and possibly better. All right, now you have to remember the trailing stop could be a couple things. You could actually move higher, and the trailing stop can come underneath us, or if it doesn't get triggered, then you'll have the regular stop. Again, this is kind of a tight thing. You can see this is a pretty good flag. It did break down under the 20 here, under the 50, but then bounced back up. It wasn't a I don't know. Oh yeah, well it did fit the criteria. It did fit the criteria there. And some, you know what? Sometimes you're just not going to get it. Sometimes it's going to drag on, and the market's just not what it is. Overall, I could see it was probably just too tight on the stop on that one. Now, just I want to get to the new script because that has a lot of new stuff, and you can really program it yourself. This is just set and go, and you can't really do much. You have to just rely on it, which is fine. It works good. It works really good. I mean, I said this so many times today because so many people came to me and said, "Man, did you see the you see the flag bot this last month?" I go, "No." I said, "No, I didn't. 'Cause I didn't have it running," and sure enough, it was like outstanding. Now, there's a nice little flag. And again, this is what we're looking for. We're looking for the pullbacks. And when you get a pullback, what's happening is your bigger trend is higher, and your pullback is your 9-3, and that gets lower. And you want to really capture that on that 9-3 rotation as long as the trend is strong. And that's usually where you break out of your flag. That wasn't that great. That wasn't that exciting of that one. I mean, you can see not many setups here. So we started this week. I started really paying it I would say 2 weeks ago. Really started paying attention to the the setups on the 60-10 and how strong they were and how fast those rotations were. And when those things rotated down really quickly and it was holding above the 90 level, 85, 90, it was just, it was so strong to see the moves off of it. And this required us to be in a very strong trend. So there was some things that I wanted to do to capture that and be able to program that and make sure that we only take the best setups. And we don't just have to trade chop and stuff. So I redid the bot here. You're going to see something really incredible now. Let's switch this over. I'm going to actually remove this, so I don't want to apply this. All right, so it's called the BullFlagExtreme2020. All right, now you might have to zoom in on your computer. I'm sorry, I can't get this any bigger. The text stays the same. It's called a BullFlagExtreme. I'll send it out with this video. There'll be a link. You'll already have permission on it. If you have the bot channel, I'll make sure you have a permission on it. All right. So we know what our formula is. And I was saying, because of the hard-coded one before, we had that set at, I believe that was set at 80. Might even been at 75. I was giving it enough room to be able to capture some. This, I found out it's much better to have it above 85. We have this above 85. And underneath 25 is that 85, 25 is really, really nice. And this is also important. Instead of being, when we talked about how do we determine if there is a very bullish trend, is when the stochastics are embedded. All right, embedded means in the up here in the above the 80, above the 85. Personally, whatever that number is going to be embedded. How many candles do you want to be up there? So I always say you want to be about over 5 to 10 candles is usually really strong. Once you get up there, and on both sides of both sides, if it's all down there and it's under, like today when the market was selling off, I'll show you that in a second. You were pinned down at the bottom, and every rotation up was just a perfect flag. So, all right. So I would recommend keeping it at 85, 25. But in some cases, what we're going to test out later, we're going to move that to 90. All right, and it's really going to tighten up everything because that's the strongest. I think that's really, really strong. You don't usually see a 90, 25. Maybe a 90, 30. That 90 being up there doesn't give it that 9-3 rotation. Lots of time gets sucked right up too. If it gets down close to 20, well, you don't see it too often. So that's how many bars required. Lot size, how many contracts you want to take is right there. All right. So just say we took 5, and then take profit ticks. This is where you want your first target. So your first target's down here. Now I put down 30 ticks. I said, well, that's a lot. That's how am I going to get 30 ticks on it? Well, what I like on this is, I said, well, I wanted to give us the biggest opportunity to get profits on it. So I didn't want to get stopped out. I wanted the trailing stop to really just control our trade and see how far we could get on some of these trades. And for that to happen, I wanted this far away. Now this happened to get hit a couple times, which is great. And that'll close out the trade. So, well, that'll actually take profits. That will, if 30 ticks came into play, remember our lot size is 5. Our target contracts, meaning once we hit our target, how many contracts you want to take off. So I have 3 here. So 3 is going to come off if it hits 30 ticks. So we'll continue to hold those if it's following up. These are for explosive moves usually, because our trailing stop I have defaulted to 8. All right, I have it defaulted to 8. Our initial target is 6, but this is 8 is a trailing stop. Trailing stop ticks. Let me initial stop. All right, so here's the initial stop. Because this is a flag, I'm not using signal bar low, which is the formula low for divergences. This is just a standard, adjust your flag to what the market's, parameters are looking like. You look at the markets, look at the average true range of the day on certain time frames, and you'll get a feel for what the market, what you want to give it. With the flag, A lot of this stuff is going to be taken care of. You're not going to have to even deal with this because I'm going to show you some of the improvements I made. Now, on the bot up here, we could take the flags without being above or below the 20-period moving average. You know, I prefer to be above the 20-period moving average or at least the 50-period moving average. So you could say I'm requiring to be above the 50-period moving average. So you would click on that. That means even if you had a flag but it was underneath the 50, it would not trigger. You know, it'd smell that weakness and say, no, we want to stay that. Or you could tighten it up and say it would require to be above the 20. And that's really the classic 2020 bull flag. That's probably the strongest indicator. It's almost like a filter that filters more things in there to give it more strength. You'll get less trades because you're tightening up the criteria, but those trades will be prime time, and we'll show you. The overbought, oversold lines, we already explained those. How many bars, we already explained that. Lot size, we did that. Trailing stops, already did that. Take profits. All right. I have it as doing both longs and shorts. All right. So one script, you could run both on the same script. It means if it recognizes it, it recognizes it. So I could just you're going to just enable longs. Let's say we're just going to enable longs here. All right, so we're going to run through these and show you how it works. So I don't have to worry about my short setups here. But if I do put short setups also, these are the parameters. Remember how my parameters are here on 85.25? And that tells me how do I want to have a very strong trend. I'm going to move this up to 90. Do I want to have a faster pullback? Maybe I want to move this up to 30. That's going to give us that high rotation and a stronger bounce. Maybe we don't get down to 20 if this is above 90. It's a good combination to have. All right, same thing on this. Now, if you're a short, you're looking at that short, that 60-10, which is the top line. I should mark that as the 60 stochastic. Is going to be embedded. It could be under 20. It could be under 15. I made it kind of opposite of the 85. So we made it really weak, which is 15. You can make it 10, which is really weak. And then the overbought level is where that 9.3 bounces to. Do you want it to bounce above 80? You could probably put 80. 80 is good. Or what do I say, 75? That's probably because I wasn't paying attention. But we'll use 80 for now. Bars require the same thing. So it's just the opposite of the long. All right, and you can enable both of them, so they'll both do that. Now up here, it'll say require above the 50, require below the 50, above the 20, below the 20. That's for longs and shorts to keep the strength. That's our strength filter. If you want to make it the strongest or the strongest patterns, the higher the rotate, this would be 85.90. You would hold it above the 20-period moving average. And then what else would we do to make it even stronger? All right, it automatically would be above the 50. All right. So that's that. Enable long. All right. I think that was it. So let's run this. Let's run this through and see what we could find on this and see what it looks like. I think we're gonna start off by just taking the long. So what we're gonna do is just enable the long. I changed everything. I'm not going to use any of the filters yet. We're going to kind of fill those in as we go along and see if they take away some trade or tighten up the situation a little. So let's enable it. Well, I have to change my. Where's my? I'm in gangster mode. Sim original gangster. All right, there. All right. Now, we're going to go all the way to the front here. First one here. See the, now it does put that, there's a lot of stochastics here. Don't have to worry about these. I'll have these disappear. I have these here just because I was testing it and, and I wanted to see it. If it was triggering correctly by putting my mouse on, I wanted to make sure everything is looking pretty good. So, excuse me. Here you have a very fast rotation. 9-3 happened to be just at that night. Yeah, what was it? 86. It was at 86. It actually was just starting to kind of turn over. That was a big, nice bounce. I had to consider that kind of a fast, lucky grab on that. That was kind of perfectly timed. That did it. Now it says BFX. BFX means Bull Flag Extreme. I like it. BFX. So good flag there. It worked out. Now let's just go back. Now remember, the important thing about saying, all right, I want to backtest this, you have to use this script with the conditions that it's working, that it's meant for. And that's meant for a stock that is trading above the 20-period moving average. Well, actually, above the 20, above the 50. I want the bigger trend to be above the 200. So we want that. We really want that. So I don't just throw it out there in the middle of a rainstorm. If it's pouring, that's what the flag is for. That's what the bear flag is for. And you can't control that when you backtest and say, oh, I want to backtest it for the year and see what it was. No, you can't do that. It's not going to be right. You're going to have down days. You wouldn't run it. It's not fair to that. The fair is to put it in the right conditions and it'll rock. And that's something that, nothing's always going to be easy. You got to know something about the markets. Understand how they work here. So here's one that kind of just didn't do much here. That was 11 o'clock. I remember this morning. All right, so let's take a look at this. This was this morning. Market sold off really hard, and we kind of got embedded down here. See how we got embedded? And we were really, really weak, and it was selling off really hard. I did take a trade, and I got run over, and I said, you know what? I want to wait for a divergence. You wait for a bounce, and you wait for it to come down, and you wait for a divergence. Sure enough. Absolutely. And for those divergence lovers, and that's why it's number one on my my number one setup is the perfect divergence right there. That is a textbook divergence with a reversal candle. Everything is green. That is just beautiful right there. But here, before that, you can see that we're selling off hard, and all of a sudden we get that bounce. And I remember this. I said, watch for the bear flag. Bear flag is a fast rotation of the 9-3, and this stays down low. And this wasn't, we were over the 9-3, and I had never seen this thing so low in my life. This was way under 20. Sometimes it's bucking around 17, 18, but this was at 4, and this was at 9. I've never seen that type of setup, really just real weak, fast bounce, and then that came right back down. And it was obvious that it was going to do that. So that's something I want to capture. So let's see if it captured. I was going to go through more of these longs, but let's just see if that captured. So that's a perfect bear flag. So let's activate we'll activate them both. What the hell? Might as well get it all done here. So I want to see if it's going to work. I'm still testing it myself. All right, here it is. Activated both. Enable longs. Fire. Let's see what shows up there. Oh my God, everything's showing up. Crazy. Yeah, all right, well, short. Yeah, there it is right there. Look, it catches the top right there. So perfect short, comes down, takes profit. Then look at it again. Back over the 80. I didn't even see that. Back over the 80. Still embedded down here. Well, it actually started to move up, but enough to get a trade in. Initial stop came in. But that was, I could see, after a divergence like this, that you want to start concentrating on bull flags after a divergence. This is probably more of a bullish scenario coming off of that. So certain things you'd like, again, if you're having this thing get you in and you're starting to see a little pullback, but you also know that you just had a divergence, most likely this pullback is going to resolve to the upside because the divergence will take you out of the divergence will be one of the bigger moves you will see. So if you do see a divergence and then you got to kind of get a bear set up, get out of that. You don't have to take, not everything has to be a super trade. Get it and say, all right, we're starting to, we held the 20-period moving average and popped back up. You probably did have a little profit on that. Now, up here, Now I have both running here, so I'm curious to see. I can't really see. Can I pull this down somehow? I can't really see what's up there. So it was a bull flag here. You can see the 9-3 rotation. And it looks like it got out at 37.50. It might have been a break-even trade. It probably went up. The trailing stop went up, and then it came back, and it just kind of chopped around up here. This is right at the open. This is right at the open of the day. We don't usually use this at that time frame either. So I would kind of cancel out these trades. It's too volatile right at 9:30. Not to say that, but even though they did work out, I think they did capture those targets. I don't know if it's a short here. I can't tell. I'm going to have to open it up a bit here. $73, $73.50, $35, $37. That took a 2-point profit right there. So it goes up there with the trailing stop. So don't think that it says stop, that it got stopped out for a loss. Lots of times you get stopped out, partial profit, and then the trailing stop comes in. You can see that underneath. So all these kind of work. This one was break even. Now we're running them both here. That's nice. Again, 84. The thing was having that target at 30. It doesn't come. We don't have a target up here. We have a trailing stop that starts to follow us up and tries to let this run as far as it can. And at one point, we have to put the trailing stop up. We could put the target down here and just go back and forth and try to get these targets. Any way you want to do it. The important part is the combination of what we're looking for. Let me see if this is, fix this chart a little bit. There we go. This one didn't get going here. Let's see. Oh, this is a short here. I'm looking at it. I'm like, what? What's going on here? All right. So here, nice bounce. 9-3 rotation. Weakness. Pullback. Pullback. And the 60-10 is over this. I'm going to actually have to have another. I might put another filter in here, especially with that 60-10 coming into play. There's a nice flag here. I actually pointed out. I think we probably pointed this one out. 10 o'clock. Oh, this is the one we just went over, didn't we? We just went over these. What am I doing? I just went over all those. Now I did them twice. All right. There we go. Let's see where we are here. These are new ones. So along. This is classic. The pullback. I have it above 20, right below 25, and then this is embedded up here pretty good. So that was a good flag. And it was also holding the 20-period moving average, and the trailing stop got triggered here. It went long again. I'm going back. All right, nice pullback, fast rotation, strength above the 60, holding above the 20-50 period moving average. Good. Nice flag. Oh, yeah, look at this. Nice pullback, holding the 50, rotation underneath 9-3, very strong rotation here. Flag, boom. Nice pullback. Fast rotation, 9-3, holding way above the 20 here. Flag, boom. I like my sound effects. Now, when you get into when this is right out of the box. This is right out of the box. Boom, there. We didn't really set any parameters or anything. This is straight out of the box right now. 64 to 67 trailing stop. Wow, look at that. Even when nothing's happening, it gets us in at the lows here, right? I mean, there's not much here, but just that little dip got us down, oversold, and then from that point on, we actually started lifting, and then got up a little bit further. Kind of boring. That's at 5 o'clock. That's 12 o'clock at night, And again, you have to make sure that you're using this at the proper time. Look at this short. Oh my God, look at that beautiful short. Short didn't get stopped out there. It didn't, which is fine. But again, the embedded stochastics down here, the rotation up, it took a while before it rolled over. All right. Now, I circled this one. I wanted to show you something here. This was a short. And sometimes you could have a good setup. Everything's embedded. You get the rotation, and you trigger on the short, and it starts going your way, and it starts going your way, right? And the next thing you know, it doesn't trigger enough to get your trailing stop. That maybe it goes 7.5 ticks instead of 8 ticks. It goes 1.5, and it just misses that. So you're kind of left hanging. You're kind of left hanging there. And what happens is you look back down here and you said, wow, that was a fast rotation on the 9.3. That 9.3 rotated back down. Normally that 9.3 rotation, when that gets rotated back down very fast, and this holds above 80, that's our bull flag. But in either case, whenever the 9.3 gets oversold, there's a better chance of that rotation up. So if you ever take a bear flag or a bear divergence, all right, and you get a fast rotation, I talk about this all the time, and this is where I take my trades, and it might not look like, even in some cases, $20 here, $30 there, but I'm taking them off. You'll see that it comes right back, and I didn't have to deal with that stress before. It might go higher after all, but the odds are when you get that 9.3 rotation, in either case, you're going to get that bounce. So you have a little profit here, but maybe you didn't take it off or it didn't trigger any profit. You have an option to get out. You should be seeing this. Now, the next thing I want to do, the next version of this, I want to put what's called the safety net on this, and it'll just be another filter. And the filter, I might do this right before I send it out to you guys tonight, and so you'll have it. And the filter, what we're going to do with the filter is if you're in a trade, no matter what's going on, if it's a short and your 9.3 gets oversold under 20, you take your trade off, you cover. All right, if you might have a profit. It's most likely you will have a profit if this is moving down and got oversold. Most likely you will have a profit, and you'll probably have a good reason to get out because that 9.3 will just set you up with a quad again, and this should be a buy signal. That would be a buy signal. A lot of people would say this is a buy signal right here because of our quad rotation. 1, 2, 3, 4, quad rotation. So you have to recognize when the time to get out is going to make a successful trader. You don't want to get into the trade and just say, oh, I'm just going to let the trade play. It's either going to win or it's going to lose. No, because lots of times you'll be in a winning position, but the bot doesn't know if there's news or maybe something comes out real fast, and you just want to be able to control that trade and analyze it as it's going on. So I'm trying to put some of these extra filters in that we could just filter out. Like, all right, I want to get out on these 9.3s rotations. That's a safe thing. I have that on the Trading View. Actually, I have the safety net on the Trading View scripts. This flag is not on the Trading View scripts yet. The extreme flag, that's going to come. So it's very soon, very, very soon. All right. Again, even in these cases where we go sideways, very strong market holding above the 20-period moving average. How do you know when it's going to go? Like, out of all these candles, this is the one that triggered right here, and then from that point on, you can see there is a gradual move up. Gradual move. So how do we do that? Well, it's that 9.3 rotation. Look at that. Boom. Right when we tag this, like algorithms out there. This is also embedded up here. Super strong. Super, super strong. 95. 95. Let me say that again. 95. What time is it? This is at, this is a really nice setup too. So, I mean, if you wanted just these setups, I want to circle this. I want to circle it here. All right. Now what I'm going to do is, you see this one over here, you see this one over here. What we're going to do is, this should stay. and these other ones probably will disappear. What I'm going to do is, let's deactivate it for a second. All right, now it's not there. We're going to put our threshold on our buy side to 90. All right, to 90. And we're going to move this to 35. Because, like I said, if you have it embedded above 90, most likely it's not going to be able to rotate all. The strength is too strong. So you don't want to miss that. You don't want it to start curving up a little earlier. I'd almost even let that, take that at 50. Under 50. We'll try that next. We'll actually try that next. Let me just take the short off here for a second. And then I just want to see if this should trigger this. There it is, right there. So, again, you can see these disappeared. And most of these will disappear unless they are super strong type of high rotation like that. Now, this one was. What time is that? 11 o'clock. That didn't go too far. That actually turned over. The one thing I will say about the flags, the reason the flags are not divergences, well, the reason they're not king of the hill, is there is a weakness. All right, but there's a strength also. There's a strength in flags, but there's also a weakness. Flags tend to happen in groups. You get a strong trend, you get a flag, follow through, flag, follow through, flag, and then eventually that flag will fail. And lots of times, it's a game of musical chairs. When the music stops, there will be a time when something fails. And sometimes we could analyze that. Maybe we see a rotation or something, or it's a guesswork, but sometimes you have to take that. It's like the cost of doing business. It's sitting down at one point you're going to get a bad beat, or it's going to come up to you and it's going to reverse. And that's usually, in itself, you'd say, oh, I wish there was a signal for that. But that actually signal of failing like that is a signal, knowing that typically that would have worked out. So there's probably a better chance that the weakness is coming into the market. And sure enough, that was the big move. Look at this. What's going up to overall down is from when that flag finally breaks down. Especially with a 9-3 breaking down. That's the only time that really broke down. So that's a signal in itself, even though it didn't follow through like this one did. Eventually, they can break down. So if you catch them early in the growth of a flag, that's the best. That's absolutely the best. Because you can catch 1, 2, 3, 4 flags in a row. Once you get to 5 or 6, then the music starts stopping faster and faster until you start pushing the little girl down off her chair. Not that I did that. Let's see. All right. Here's the one here long. Again, this is the high rotation one. And then it kind of popped there. Then it came back down. That's hard to say. Yeah, but, the parameters are not going to give you too many setups because that's such a strong trend. That's a strong, looking for a very strong trend. Enable that long. So I put that at 90, so we want to probably put that back down to 85. I thought the 85 was really a good match. But, the other thing I wanted to try this with you for a second. Let's do 90 and let's do 50 here. All right, let's do that. I'm just curious. It's been something I was curious about. Because lots of times it doesn't get the full rotation, but if it comes into 50, then I see it. That one we already know was the set. But it's not many under 90. All right, let me hold on. I'm just going to go back to the beginning here. All right, that didn't do anything. This one was very strong and went sideways. Those worked out, but this was Again, this was a big reversal one. You had a long and then eventually broke down. Flags here, flag here, flag here, and then eventually, here was a little flag and it broke down. It's better. That's what I like. See these type of trends here? That's really nice. And then you just have to widen your trailing stop, and you probably capture a lot more of this. You capture a lot more of this. It's probably worth making that trailing stop a little bit longer too. Let's do. Well, should we do that? Yeah, that's nice. So this is the 90-50 combination. That's nice. All right, here's a couple. Oh, look at it. This is what we like. This is what I like. I like the flag here, this nice classic flag pole, the pull back to the 20, the long trailing stop followed up, pull back flag, long, pull back flag. Then we start to flatten out here. This one a little tight here. All right, so you can see pretty impressive. Now, there's a couple things. You know what we need to do? We need to run it, and I did this today. I'm going to just, let's see here. Let me find my Ninja Trader here. Not that. All right, let's do this. Let's do new strategy analyzer. All right, so let's see if that takes a while to pop up on there. I do have the stream set on Bitcoin tonight and going over the weekend. I do have the Bitcoin trade up on the screen on our show, and I do have the Thunderbird script running on the 1 minute time frame, so if you happen to tune in. Now, where is this thing? This thing takes so long to kind of pop up. Let's see, where is it? Oh, there it is. All right, so here it is. This is our Ninja Script Analyzer. And again, I mentioned before, I don't really believe in backtesting because every market is different, and you have to know when to apply it and when, certain time frames you should apply it, not run it overnight when there's no volatility, no liquidity in the market. But just to get a base understanding over the last couple days. Let's see here. Where is it? Here it is. All right. Oh, I also had a filter. I didn't talk about the filter. So there's where I talk about trends, and it's very important to, you can activate both of these, the long and the short. We're not going to do that right now, but you could activate both of them, but use the 200 EMA as a filter, meaning if it's trading above the 200 period moving average, then you're only going to take longs. If it's trading under the 200 period moving average, it's only going to take shorts. So if you have them both checked off, but you have this checked off, that means they'll be in auto mode, and they'll use that 200 period moving average as your filter if you're going to be long or short. I think that is great. That is great. Now you can do other ways. I could do another one too, where we have the moving averages cross each other. Let's see here. I'm just going to take that off for now because we're not going to. Let me see what this is. We'll leave the default on 85, 25, 5 bars, lot size 5. Target contracts, we take 3 off. Initial stop 12. Trailing stop 8. Starts at 8, follows it by 8. Taking profits 30 ticks. We're not going to worry about the shorts right now with value 1. Let's just, I'm going to put this in. I'm just going to do last couple days here. Thursday and Friday. Because I know what the market's doing. It was, all right, and let's see. 1 minute instrument. We'll do ES as a base, but we can move that to the MES also to be more realistic. 1 minute time frame. All right, so everything is good. We're only doing longs, right? Enable long. Enable short? No, we don't want to do that. We'll do that next. I don't, this is all brand new. All right, let's run it. Now, all right, so 15 trades, 73%, 11 winners, 2 losers. 2 losers only. Profit of $5,037. Profit factor of 4.36. Sharp ratio 4.77. Some other stuff. Ulcer index, nothing. 73. I mean, that's great. That's great. Average number of trades a day, I guess that's in a 24-hour period, is 10. Now, what I would like to do is, now we could really, remember we talked about, we had 15 trades, all right? So let's do this. Let's make this 90, and let's make this 35. So we're up in our strength level a little on the 90, and see if that changes or tightens things up. We're at pretty good results. I don't want to break it. So at 15 trades at 73%. 4 trades, 4 winners. Good night. It's a walk-off home run. 1375. All right. Again, if I even go out further, I would go out. I don't like going out too further. I like to go out to the markets I would apply this in. I know those. Where are we at here? All right, we're going back the whole week. Again, some days you don't just run the buy side. You run the short side. You don't run the buy side when you're underneath the 200 period moving average. Right now, applying this, and I should actually, I'm going to see what it looks like, and then we'll hit the 200 filter and see how many trades it is. All right, see, it actually came right back. Look at it, 60% now. That's going up. It must have been a day when the market was trending down, and you're not going to get the moves, and you're going to get the faster rotations. The last couple of days have been very strong, so you want to run this in a very strong market. Let's see what happened on that. Oh, what would I have on this? On 1575, I have the 90 overbought. Let's go back to 85 for a second, and let's go back to 35, 25. And that's a big difference. Even though 55% still losses, but still pretty good on the profit there. And that's gonna be, we could break that down to the MES. Now I wanted to see if if this thing, we had 34 trades. Let's see how many trades that are taken underneath the 200 period moving average. So I'm going to click on that. Let's see, 34. Let's see how many gets subtracted from this. 29. So 5 trades were underneath that, and look at the profit now went up. Profit went up a lot more too. Percentages didn't, but the profits did. And that's because now we put the 200 EMA filter on. It means there's no trades going to be traded if it's underneath the 200 period moving average. Now we can tighten this up even more and say, well, I want these trades to be above the 20. Let's say, well, if it's above the 20, most likely it's above. No, I shouldn't say that. Let's just see what happens. And again, this is going out the whole week, so it's the whole week. That was no good. What was that one on? That was required at 20. Let's see the 50 here. So I think the 200 is the best filter for myself. You might think, that's not that impressive. Now, this is really, really tight. This is really tight. For something like a bull flag, you got a trendy market, you open these up a little. Then you're talking your profits are going to just skyrocket. So right now we have the initial stop coming at 12. Let's move that out to, or it was at 8. Should we move it out to 12? Let's move it out to 15. I hope this is not going to crash. Let's do that. Let's see what the difference is. Right now it's $3,837. Let's see if that trailing stop widened that trailing stop. 3,000 back up to $5,000 now. So another $2,000. You leave on the table because your stop is really, really tight. Oh, let me do that on the other one too. All right, so going back, I mean, 26-17, winning trades, the trailing stop. I mean, I'd rather see better setups on this, but I know the market going against you, you're going to always have that thing. So, you know, do we have that? Yeah, the 200 filters in. That makes it profitable. Let's do this. My first time actually ever doing both the longs and the shorts. So, well, actually, let's just do the shorts and see what that does. We'll leave that. I'm not even going to change the parameters on the shorts here. Short setup is 15.75. We can probably change those up a little. Make that 80. Well, let's see what this gives us here. I'm not even sure. Enable shorts. Run. All right. 22 trades. 2,562. 13 winners. Not that great. 9 losers. Let's I'm curious now to do both of them. I've never done two scans on one test here. I don't know what's gonna happen. Are they gonna combine it? It would be about 7,000. No, that doesn't make sense. 5 trades. That I have to look into why that is. Be careful. I always say run one script, put it as a long, do another, then bring it down again and run it as a short. This is the first version going out. If there's any complications between running the long and the short together, let me know, and I can fix that really fast. Because I want you guys to test it. Send me your wish list of how to add to it to make it even better. The formula is good. You have a way of actually pretty much adjusting everything that you want on this. Let me see where that is. What am I doing this? I never did 2 on this. I don't even know if that works properly. You know what I'm going to do? Let me go back to that short here. All right, here's the short. I want to just see that short. Oversold. I want to put this down at 10 here. So that's really, really weak. Yeah, that's not bad. That's a real weak market. I've seen, like today we're down in that 4 or 5. We're under 5. We moved this up to 80, just a little. Yeah, that's a big difference. That's a big difference right there. $4,500, 77% versus 75 versus 80. That 80 line, that's again, this now we're on the short setup. Remember, this is on the short, enable short. And this is going back the whole week, which is much better. This is what I like. So the 60-10 is going to be under 10 for 5 bars or more. And the 9-3 is going to rotate up above 80 quickly as that's under 10. That's going to give us the bear flag. All right? That's going to give us the bear flag. That's pretty nice. All right. Just put it out to the whole month. So I went back to the week. I said, let's go out. Let's test this thing here. So I went out. Let's see here. We went all the way back to the whole last month too. So this is really good. This is 80%. We're looking at, this is a shorts, right? Oversold 10, 80. That's the real weakness. I like that 10 because I noticed that a lot. When we're down under 10, under 5, it's very, very weak. We continue to sell that. That selling just happens so much. So it actually is a little stronger on the short side when that gets under versus the market when it gets above 90. This is actually a better trade that I noticed, when we get down to that 10 level. And it's actually showing it to me now. Again, the profits these are all the same, but we can adjust those too. Trailing stop really kicked in here. 10 trades. And this is going throughout the whole month? How could that be? Because the 200 period moving average filter's on. Let's what happens when we take that 200 period filter off. Let's take it off. Drum roll, please. And two more trades. Two. Something's wrong here. This doesn't seem right. It seems like there should be a lot more shorts. Something's. Oh, you know what? Maybe we didn't have this really short. So that makes sense. No, I changed this. There's a lot better. It's very rare that we get to under 10. Remember, we had this at 15. It was a big difference between 15 and 10. Much big difference. 75% versus 61%. Still a lot of money there. But yeah, definitely that 10 level. So remember that. I would say remember that. We could learn a lesson here. Keep that at 10. 1080. 5 contracts. Trailing stop is set 15. 30. Let's go up here a little bit further because this probably could go to 50. Take profits 50 because we want this trailing stop to take it as far as it can. It might take it much further. So let's take a look at it now. Run this baby. I'm looking at the money. 5,400, 5,200, 70%. Not much of a change there. 10 trades, 7-3. I'm happy. I'm very happy with it. Curious to take everything off at 50 if we get 50. Well, no. Target contracts 3. I don't think we ever get up there, but we might. That will eliminate. That's just going to eliminate. This is taking everything out of the picture. This is put the target contract at 5, meaning if 30 ticks is hit, all 5 come off. All right. So let's just see. I'm just going to run that. I'm doing some testing with you. Yeah, that's still, So you get it, right? If it's 3, then 2 are left off, and we could continue to run. So maybe we want to keep that at 50 even. Leave that 3 on there and then let it go. I think that'll be fine. That keeps it at 52. 10, 70%. 200 EMA filter. Do we even filter this out? We could even filter it more. That means it has to be traded under the 200 for the shorts to be effective. I think most likely it will be, but let's run it and see if it takes any trades away. Maybe it takes some of the losing trades away. All right, let's run it and see what happens. I had 10 trades on. Now we have 8, and we went up in percentage. So we did take out a losing trade because that trade happened over the 200 period moving average, which probably meant there was a trend happening and it went short against it. And the price went up, and we made more money. So again, that 200 filter is great. Strength filters here, the 50 on both. Again, below if it's for a short, right? Yeah. Above if you're for a long, you want it to pull back and stay above those. The 20 and 50, you could just use the 50, 20. You're just going to use one of those, basically. Let's see here. Everything else looks good. I keep on going back on the thing. I'm just moving it back here, month by month. The parameters set on this right now are so good that it's because it's such a strong. Let me see here, short setup. This is a strong short. If this market starts to pull back more, this thing is going to start really doing well. Because it's so weak, that 10, because it's so weak, it's giving us really good trades. Very profitable trades, at least. Yeah, there is a couple. The largest loser went 784. We could probably even tighten that up. That's not bad. Let's go out one more. Okay, I'm going to go all the way up to June. I never do this because I say this never works. This never works. You always end up with negative results after you go back because you just can't, there'll be things in the market you can't control and it just gets you. But these are extreme levels here. All right, still up there. Profit is still up there. Trades at 30, going out for 3 months, 4 months. All right. Let's go out a little bit further. Let's go out. I never went out the whole year. We're going back the whole year. I would say negative. There's not many times you see positive, something running like this without the market going into a phase that smashes everyone in the face. Holy shit. All right, well, that's the whole year. Now, it's not much. It's 11,000, but it does show I'd like to get those percentages up. But you have fun with it. You get to use it. It's yours now. I pretty much showed you how to use the whole thing. I love it on the short-term time frames. I haven't really tested on the 5-minute time frame or the 3-minute time frame. Value, what the hell, right? It's going out the whole year. I have no. Yeah. Oh no. It's programmed for the 1 minute. I wouldn't do anything else other than that. But I could try it on the Bitcoin after. So here it is. Here's the this is the BullFlagExtreme. Let me take a look at the parameters on this again. Hope you followed along with everything. I was enabled the longs there. Let's just enable the short. The short is going to be at 10. What was it going to be? 75 was it? Or so? The important one is that top 110. That really gives us that weakness. We'll use the 200 EMA also, so we're not taking any bad trades against that. And let's enable it. That's just a short. Now this is a very almost an exact, you know, it's not too often you get that really oversold level here. Here's one right here. Beautiful. This is what I love. Like today this was a textbook example of a perfect bear flag, an extreme bear flag. All right, that's it. The files attached. I'm going to continue to do updates on this. All right. I'm going to over the next week or so. I'm probably going to bother you and say, all right, you need to update this one. This is the latest update. So this is just the first version. Again, if you have anything you would like, I'll try to implement it. Just give me time on that. All right. It's hard enough to get this video out and get this thing corrected and fixed. I'm very happy with this. I'm excited to keep this just running. It looks like it's giving us nice profits. And I'm going to be running it on the Rockbot channel next week. I have it. Do I have it running on the Bitcoin chart tonight? No, I don't. I just have the Thunderbird. All right. Have a good one, everyone. Remember, you can get this as a member, DayTradingRadio.com. Hope you enjoyed the thing. Bull flag is very important. I teach it how to trade it exclusively with our method. And it's good to know, you know, by hand how to do this. You know, when I say by hand, recognizing just by, you know, here's a flag, you got the rotation, this is strong, this would be a bull flag right here. You know that because of everything that's happening. You have four stochastic bands. That's a classic example right there. That's what I want you to learn. This is a tool to identify them. Sometimes they're going to get run over if there's news or something out there that's just not playing fair, and that's going to be part of the business. So I hope you enjoyed that. I'll see you in the markets. DayTradingRadio.com, DTR.TV /free for your free trial.